Hey, what's up you guys? Lukas here from excelwealth.com, and great that you joined in today, because in today's video, I'm going to talk about the 3 ways that you can be investing the moment you're in your 30s. Now, if you're not in your 30s yet, then yes, you can be preparing for this video and for these tips to come in your life. So be sure to watch this video if you want to know what you should be doing the moment you reach your 30s. Now, as a 30-year-old, most people have a good job, a good paying job, they have a good life, but I'll tell you this, in most cases, super busy. And yes, I'm a 30-year-old, and I'm a super busy person as well. Now, there are 3 ways to be investing as a 30-year-old. Although you're very super busy, there are still ways for you to be able to make money. But you really have to focus on it, and you really have to think about it. Now, the first way I always say is the active trading method. And yes, I'm not actually focusing on day trading, because most likely as a 30-year-old, if you're actively day trading, you're either doing it as a full-time job, and if not, then most likely you're failing at it. Because yeah, you can't really be doing day trading and having a day job next to it as a as a driver or anything. You can't be doing that. You can't be doing that. That doesn't work. That doesn't work. So there's the active trading method, the active investing method. And there is something that is actively busy for you, but still yet passively enough. This is called swing trading. Swing trading is something that you don't have to do, each and every 10 or 5 or, minute. But yet you actually invest at the beginning of the week, and you hope to have a nice return at the end of the week. Now, you can be focusing on the market if you want to, but you don't have to. This is nice, and you could get up to maybe like 2% of return by the end of the week. And if you have, amounts like $100,000 that you're actually investing with, 2% at the end of the week, hey, it's not bad. Does cost you some time and some effort, and maybe some stress next to the work that you already have. Because if you're working on a very important project and you're also keeping track of the stocks of that day, could be a bit exciting, I get that, but hey, it does work out, and you could generate a nice return. But the thing is, active trading, you could also have weeks that are playing on 0% of return, or even a negative return, meaning you lost some money. So yes, actively trading is what I call it for 30-year-olds. Swing trading, very nice option. You could actually play it within a week, but you can even play it in a month time. So, not bad. But, if you like to be busy and you still have time next to the jobs that you're doing, good, why not? Now, the second way of investing as a 30-year-old could, of course, be, in growth or in value investing. Something that Warren Buffett, for example, does. Now, your job is to investigate a certain company, look into all the information of a company, and invest for over time. Now, this could be just a few months' time and say like, hey, you know what? It is currently being overvalued, overestimated. Then pull the plug. And if you believe, hey, it's still underestimated, I'm leaving it more money, I'm going to put in more money so that it will grow over time even more. Emotions come into play in this one, but because you've done your research up front, you've done your facts check, and you know what the company is doing for the coming quarter, the coming semester, coming year. You know what they're doing, so you can actually bet into their company for a longer while. Works fine, and it's slightly more passive compared to the swing trading. And you could have great returns depending if you pick a volatile company or if you just pick a growth company. It could grow up to maybe 20% per year. Not bad. Now, this will actually cost you slightly more research time up front. But while it happens, you could say like, you know what? Hey, I don't have to focus on that because it'll do its job by itself. And each month I just log in and check if this company is still doing a great job on the long term. Now, the third method for investing for 30-year-olds is actually the passive method. And if you've watched my other videos, you could actually just easily say, you know what, I'm going to put in, like dollar cost averaging method, I'm going to put in money each and every month in, for example, like the S&P 500 or the Dow Jones or any other company. I could do that. I could easily do that. Now the question here is passive investing. If you invest in an ETF, it just tracks the index. It just tracks the benchmark. What happens is if you have to passively do nothing, then the returns are also lower because the risks are lower. And the moment the risks are lower, the returns are lower as well in the end. Does it cost you any time? Most likely, hardly any. Does it give you a nice return? More than the bank does using their interest rates. Because in the end, yeah, the banks leaving your money in the savings account doesn't really do anything. So yeah, so it's a good choice to put it passively. If you have no knowledge at all, or if you believe, you know what, I don't know anything about investing, but I don't want it to depreciate over time. So yes, passively investing is always better than putting it at the bank right now. So those are the three methods. Now, I would always say, you know what, if you do a little bit more research, if you invest a little bit of time in your own knowledge, investing it in growth stocks and investing it in value investing might not be a bad idea because it doesn't cost you that much time to look into it, but it does generate you up to 20% per year. And yes, if you have more time on hands, why not do it actively and do it like swing trading? But the most important thing as a 30-year-old is when colleagues talk about either of the investment methods, don't think like, I think I chose the wrong one. Because yeah, we all know the saying, the grass is always greener on the other end. And yes, that's always true. And yes, people who talk about their stocks, especially to colleagues, you know that. That's to brag. That's to show off. That's to tell you, doing a better job than you are. But in the end, they're still working in the same job, just like you. So don't worry about what they do. Make your choice. Stick to your decision and make it happen. And at some point, you have your interest rates growing. You have your returns growing. The moment you actually reap your benefits, you'll be like, hey, I did a great job. And that's totally fine. It's not about others. It's about you. It's about you. 30-year-olds, get started now. Because the moment you turn 50, and when your kids are old enough, you just missed 20 years of at least passive investing. That's the least thing you could do. So invest. Passively, semi-passively, or even actively. And if you like this video, of course, be sure to hit that like button because it will really help out YouTube's algorithm. And of course, if you like more content like this, be sure to come back to my channel and watch videos like these. I thank you very much for watching. Happy investing. See you on the next.